do you make of Janet Yellen's press conference?
You know, I thought she did a very good job, but to me it's not, you know, I have to admit, I'm not looking for poise. I'm not looking for the empathy. All those are fine qualities. I'm just there for the steak and potatoes, okay? And with regard to that avenue, I really don't think we learned a lot more. Forward guidance or, you know, forecast a couple years down the road would be like talking to a horse track handicapper telling you who's going to place 2 years from now in a race. I don't think anybody has that kind of vision. I do think that the market... Yeah, I think the market said it all. Flattening yield curve. Holy cow, it was huge. And there was a lot of selling before the statement. Really made me scratch my head.
Yeah, Stephanie, what do you make of it? How significant was it that she's talking potentially about a shorter time frame if you could, you know, take those words for exactly what they mean, literally 6 months or something like that with regard to starting to raise interest rates here?
Well, I think that it's their actions that we have to pay attention to, and they're tapering again this month. They're going to continue to taper, and why is that? That's because the economy is getting better. We have seen over the last 2 weeks a lot better data, ISMs, PMIs. We saw the non-farm payroll number that was supposed to be horrible. That wasn't. It was much stronger. This week, industrial production, capacity utilization. I could go on and on. It's not perfect. There's still some very weak pockets in the economy, but we are getting out of this weather issue, I think. We can snap back. The Fed clearly sees that we are on a trajectory of getting better growth, and I'll take better growth and higher rates any day.
Right. So will the financials and some of the insurance names here.
If the data doesn't warrant them to increase interest rates or continuing to taper, they're not going to do it, and that's very, very clear.
Nathan?
I would tell you the only snapback that I saw today was that the Hawks, who have really been kept in check by Bernanke, got a chance to snap back today on Janet Yellen and say, really, we've been having an opinion for a while, and now that Ben's not out of here, let me tell you. Now, I think what Janet's going to do, first off, let's not forget one thing. She grew up in Brooklyn 50 years ago. You want to mess with her? Fine. I'm not going to mess with her. I'm really clear about that. But you know that old expression, what if they threw a party and nobody showed up? Well, what if unemployment went down and inflation didn't show up? Well, I think the whole deal is going to get rethought. And when they're looking about 215, 216, I'm with good luck on that.
Hey, Michael Foreman, I don't know if you heard David Stockman last hour making some comments about how dissatisfied he is with the whole policy of quantitative easing in the first place. And he pointed to the corporate sector. It said they're levered to the hilt. You know, there's going to be an unsustainable situation. It's all about financial engineering, and there's nothing fundamentally strong here. And this is all going to be pinned on the Fed down the road. What would your response be to all of that?
Well, my view, Kelly, and thank you for having me on the show, is that
great to see you.
There's certainly a lot of uncertainty in the markets right now. We're very defensive in our approach. Certainly there's a case to be made for rising interest rates in the future. We all know at some point rates are going to go up. At this point, we see rates staying low for a while, so we're defensive. We're very cautious. We think there is some growth in the economy, but we're not taking risk. And our biggest concern right now is risk isn't priced into the market. So we're in the credit markets. Yields have gotten very, very narrow. And if you look at some of the other asset classes like equities, we're concerned there's asset bubbles out there. So we think it's time for investors to be cautious. We are prepared for some volatility, and we're going to look very careful at the kind of investments we make in light of the potential climate going forward.